Bitcoin just touched $80,000 this morning as the US Treasury flirts with pulling $1 trillion out of its own bank account to go buy America's own debt.
Why would I want to blow up the global financial system?
And this lands on top of the biggest short squeeze and dollar move in Bitcoin's history, where it added $15,000 in less than a week. Now think about what we never got in 2024 or 2025, a parabolic move. 2 years of grinding sideways while everybody argued about whether the 4-year cycle was dead or not. So is this the start of Bitcoin's first real parabolic run since 2021? Or is Washington about to do something a whole lot bigger than any of us are pricing? This is Truth Block. I'm Hurley. Let's mine truth. Bitcoin launched from around 64K last Wednesday morning, briefly touching 80K this morning. In dollar terms, that's the biggest week Bitcoin has ever had, and the closest thing we've seen to a god candle. Gold is up almost 6% on the week, silver almost 10%, Bitcoin is up 22%. The ETFs took in $2 billion, which is their best week since last October. The bear market sure looks over, and the 4-year cycle bros hoping for an October bottom near 40K are on life support. And let's not forget that on Tuesday, the US national debt crossed $40 trillion, with the last trillion added in just 154 days. Jordy Visser has been the honest bear in this space. He spent months laying out how the AI trade drained the liquidity that used to reach Bitcoin. Listen to what he says this move actually represents.
So far, this is a 7 sigma week in Bitcoin. There's only been 3 in the last decade that were greater than 5. And so people understand what a sigma week is. This is taking the movement of Bitcoin for a weekly basis, in this case, over 20%, as of when we get on here, about 23%, and going through and dividing it by what a normal weekly move would be. And in this case, a 7, we had a 60-day vol, which is what I'm using for my actual sigma calculation, of 23. So it's a daily volatility. So when you go through it, you have basically a 7 standard deviation move. The prior 2 that were above 5, they happened in April of 19 and January of 23. And I hate to say that those were the beginnings or the end of the prior 4-year cycles. Since I've said on here, I don't subscribe to any 4-year cycle. But in this case, we are getting the exact same sigma move. And in those other 2 cases, believe it or not, we also broke above the 200-day moving average. So all that leads into something I've said, which is I don't care about even trying to pick the bottom of this thing from saying it's positive until we break above the 200-day moving average. And both of those prior times, we stayed above the 200-day moving average going forward, and Bitcoin started leading to a very large rally. I happen to think with all of the things that we've talked about, the AI agents, the fact that the government is showing that they want to run things hot. You have a Treasury secretary who is quoting Satoshi in X posts. You have Kevin Warsh, who's a Bitcoin lover. You have everybody in the administration that people should be paying attention that something more important is going on here as the financial guardrails of the agentic world are starting to play out.
A normal bullish week for Bitcoin, it moves about 3%. As I mentioned, this move was 22%. A move similar to that has happened 3 times in a decade: April 2019, January 2023, and right now. Both of the other 2s broke the 200-day moving average in the same week, and both were the opening candle of a bull market. But the part that Jordy Visser skipped is the argument I've been making on this show for months. We never got a parabolic run in this cycle. This cycle was like no other as it had no business cycle underneath it, no liquidity expansion. Bitcoin touched $126,000 and then went nowhere for 2 years while everyone argued about the 4-year cycle. Visser calls those 2 years Bitcoin's silent IPO, with no filing, no roadshow, but the same economic event. A long, boring handoff of ownership out of early believers and into institutions. It's becoming clear that that was never the bull run. That was the warm-up. Which is why the last thing you want to do right now is sell the scarcest thing you own to raise dollars that can be printed infinitely. If life needs dollars this month, there's a better door. And that's why the show is sponsored by Ledn. Ledn lets you borrow up to 50% of your Bitcoin's value, funded to your bank account within 6 hours. With no credit check, no capital gains event, at roughly half the rate of a credit card. Your Bitcoin stays in secure custody and is never lent out. And Ledn has originated over $11 billion in loans since 2018 without ever losing a single Satoshi of client funds. So head to learn.ledn.io/simply to learn more. So let's talk about what actually broke this dam open. On Wednesday morning, the Treasury put out a 2-paragraph bulletin doubling its own bond buybacks from $2 billion per operation to at least $4 billion. By Thursday, the bond market had handed back every basis point. Thursday afternoon, Bessent went on CNBC and said it could be more than $4 billion. And then this morning, a report said that he may tap into the Treasury general account, which has just shy of $1 trillion in it. That's 250 times the operation he announced 5 days ago. It's quite the escalation. James Lavish ran the math. Doubling those buybacks adds about $14 billion of buying against a $12.5 trillion hole, which is why the bond market shrugged and hard money surged. The bond market priced the size, gold, silver, and Bitcoin priced the intent. And the tell was in Bessent's own explanation on CNBC.
We have a big toolkit, so we'll see. And part of it is signaling here and to show that we believe that the yields don't reflect the underlying fundamentals. This Iran conflict, we will get on the other side of this.
Bessent laid out the whole thing in a Financial Times op-ed over the weekend. And then he posted the heart of it to his own account on X, where 4 million people read it, saying, quote, "We are now entering the Endgame. At dawn begins an economic D-Day, the single greatest financial offensive ever marshaled against an adversary." And about an hour before I sat down to record this, he stood at a podium and named it Operation Economic Outcast. He announced sanctions on more than 60 entities, individuals, and vessels, and the threat of cutting people out of the US dollar system entirely.
Any entity that facilitates money laundering on behalf of Iran will be removed from the US dollar system. The clock just started ticking. The new sectoral sanctions determinations issued today target 5 of Iran's most vital lifelines that it exploits in other countries: digital assets, technology, gold, aviation, and shipping. These measures broaden secondary sanctions risk for anyone foolish enough to continue conducting business with this regime.
Digital assets and gold are the first 2 on the list. The Treasury Secretary of the United States just told you which 2 things the country reaches for when the dollar gets switched off. He knows exactly what they are. They're the exits, and he's attempting to close them. Bessent said one other thing today, and it might be the most honest sentence of the day.
You described this as an economic D-Day, but D-Day wasn't a threat of an invasion, and the U.S. didn't give a timeline to Germany. So why not impose the sanctions today?
Well, we are giving everyone the opportunity to remedy bad behavior. Why would I want to blow up the global financial system?
Just think about what that admits. The weapon is big enough to break the thing he's defending. So every central bank on earth just watched Washington manage the price of its own bonds and then use the money itself as a weapon inside a single week. And the price of Bitcoin says almost none of them have finished the thought. Matthew Siegel runs digital asset research at Van Eck. He was on CNBC the morning of the buyback, and the anchor asked him about the Clarity Act vote being a catalyst for this move in Bitcoin.
I don't think this move is about clarity at all. I think this is all about what the Treasury has done, and it is reigniting these fears of fiscal dominance. I heard your last guest say that T-bills as a percentage of the marketable debt is normal range. I disagree with that. The Treasury's own advisory committee recommends T-bills around 15 to 20% of marketable debt. We're at 23% and going higher. So as the Treasury finances more of that debt on the short end, it hits the fiscal balance immediately. It makes keeping rates high increasingly expensive. Something has to absorb that pressure. The market's telling you it's the dollar. And over the last 15 years, the only persistent correlation that Bitcoin has shown is a negative one with the dollar. So, we think this ultimately means lower real rates, a structurally weaker dollar, and Bitcoin is one of the best hedges you can find on that dynamic. So, yeah, I think it caps rates, and that's where Bitcoin shines. And the interesting thing about it is, for Bitcoin, is that it came at a time when given the 4-year cycle, Bitcoin was already looking very late in its correction. The average bear market is about 12 months. We're 10 months in. We look at a lot of metrics around the average cost basis and what the derivatives market is saying. So we've got these 12 capitulation indicators. They've all fired a positive for Bitcoin in the last 3 months. 8 out of the 12 are positive right now. Volatility was at an all-time low. So it was a coiled spring, and I think it goes higher.
Fiscal dominance in plain English is the point where the debt problem starts dictating monetary policy instead of the other way around. When keeping rates high costs more than the country can afford, the rate stops being a decision. Something has to absorb it. And Siegel says the market already voted. The dollar. Which brings me to Matt Cole over at Strive. I mentioned in the last episode that the dollar index, or the DXY, has made lower major highs for 45 straight years. And every Bitcoin bull market in history ran alongside a temporary dip in the dollar. But Bitcoin has never once lived through a longer-term structural decline in the dollar. Cole also flagged that this week Bitcoin broke out against the dollar and against gold at the same time for the first time ever. Just yet another reason why you aren't bullish enough right now. We just spent 5 minutes on a government shutting an entire country out of the global monetary system. So the obvious question is what version of your money nobody can switch off? That's holding Bitcoin in your own keys. And that's why this show is sponsored by Bitkey. Bitkey is self-custody without the single point of failure. It's multi-sig by default, where you need 2 of 3 keys to move your funds: your phone, the hardware device, and a secure recovery key. With Bitkey, there's no seed phrase to hide, protect, or lose, and recovery and inheritance are built right in. And the new Bitkey even has a screen, so you can verify every transaction on the device itself. Visit bitkey.world/truth and use my promo code TRUTH for 10% off the new Bitkey. Luke Groman was asked last week how he'd fix all of this if he were the one sitting at Treasury. Listen to what he said.
Oh, that's simple. I take the exchange stabilization fund.
Okay.
I start bidding gold. Aggressive. Then I also announced that from now on, all deficits with China, all trade deficits will be settled in gold. We've kind of been de facto doing that. I essentially, once gold's run up to a really big number, I instruct Warsh to revalue the gold. And I do that in doing that, that creates a deposit free and clear of dollars into the TGA. That's just money creation using the gold. That's like the MMT platinum coin trip, except it's actually on the books in the Federal Reserve manual.
But it's real. Yeah. The U.S. has tons of gold that is it's valued at an absurdly low level from when we bought it at like $40 or something.
Right. So say gold goes to, I don't know, let's take it at 20,000 for easy math. The TGA deposit is going to create $4 trillion. You know, that coin trick, $4 trillion into the TGA. Now I'm best and I can buy back everything in cash beyond probably 5 years. Then I roll out the Clarity Act and stick the rest of it into stable coins. And then my last little special surprise for everybody is, hey, a stable coin T-bill doesn't yield 3.5, yields 60 basis points. Have a good day. Done. Now, who wins, who loses? Treasury holders get killed. Inflation goes nuts. Wages go nuts. Nominal GDP growth goes nuts. Great. That's what we need. Who holds all the bonds? Banks, who got bailed out and never paid for it, really. And boomers, who are the richest generation in history and are consuming 80% of the budget and not paying for it. You just paid for it, guys. Thank you for your donation. Thank you for your service. Done.
Now, that's Groman's hypothetical, and nobody has announced any of it. But the interesting thing is that every piece of it already exists. Start with the authority. Section 2.10 of the Federal Reserve's own accounting manual, which is a public document, says the Treasury Secretary at his sole discretion can instruct the Fed to revalue America's gold. And as we've mentioned on the show before, America's gold is still carried on the books at $42 an ounce, frozen there since Nixon closed the gold window in 1971. We all know it trades a lot higher than that today, at over $4,500 per ounce. Groman posted the math this morning. Every $4,000 gold goes up is another $1 trillion Besant could put into that account with a signature. In other words, higher gold prices are now Besant's friend, not his enemy. Now put this next to what the man has actually said in public. Besant said that gold can't have a fiscal problem, Gold can't have a gigantic budget deficit, and gold can't have a war. He said people probably would have called him a gold bug when he ran his fund. And then he said this.
There are a lot of different stores of value over time. Bitcoin's becoming a store of value. Gold has historically been a store of value.
Every reason he gives for trusting gold is more true for Bitcoin, whose supply doesn't respond to price at all. Then late August, on his official account, he wrote that the Treasury is committed to exploring budget-neutral pathways to acquiring more Bitcoin. Budget neutral. No new taxes, no new borrowing. Exactly the kind of money gold revaluation creates out of nothing. And there's even a bill in Congress right now called ARMA that writes the Strategic Bitcoin Reserve into law and names gold revaluation as a way to fund buying more. Yep, they're not even hiding any of this. Which brings me to what Ray Dalio said on Friday. Dalio built the biggest hedge fund in history, telling people to own bonds. And he just told everybody to underweight bonds and put 10 to 15% into gold and add a bit of Bitcoin, because he thinks a US debt crisis lands in 3 years, give or take 2. Fund managers like Dalio controlled on the order of $150 trillion. A 1% allocation from that group is roughly Bitcoin's entire market cap. Not 1% of new money, 1% of what they already manage. And Bitcoin doubles. And all of this runs on a timeline measured in years. That's a long time to hold something. Long enough to lose a device, get hacked, or leave your family locked out of the most valuable thing you own. And that's why this show is sponsored by the Bitcoin Way. The Bitcoin Way offers one-on-one, white-glove counsel from real human Bitcoin experts. Anything from improving your self-custody setup, to running your own node, locking down your security, and inheritance planning so the people you love can actually receive what you built. No question is too basic for the Bitcoin Way. Visit thebitcoinway.com/Hurley, and your first 30-minute consultation is completely free. So where does this all leave us today? Let's keep it simple. James Check tracks the level bears had to defend. The short-term holder cost basis is at 67K. The 200-day moving average is at 69K. The true market mean is at 77K. Yep, we swallowed all three in the last week. There's one more. The 50-week moving average now sits around $82,000. Galaxy Research went back through every completed bear market and found 11 out of 13 times Bitcoin reclaimed that line, the low was already in. Now, I'm not going to pretend I can call the wick. A pullback to digest this monster move would be normal. But here's my read. If we take $80,000 and hold it, and then close above $82,000, I think that would solidify this as not a bear market rally. I think the bear market is done and we're off to the races.
Bitcoin needs to be in people's portfolio because it is a hedge against abundance. It cannot be destroyed because it is built on beliefs. Beliefs that it will have a store of value, just like gold, except for one thing. It's digital. And so I think everyone needs to adjust their views. And my job has always been, I'm going to keep quiet on Bitcoin until the tape tells me that it's time to be loud again. It's time to be loud again.
So what if the endgame no one sees coming is Washington reaching for hard money to buy itself more time? They have the authority to reprice gold massively with a signature. They can add $1 trillion for every $4,000 it moves. And they have a Treasury secretary who's named which two assets can't have a fiscal problem, and who's already committed to figuring out how to buy one of them without spending a dime. And here's why all of this is the most bullish thing in an ocean of bullishness. If they turn that play, it doesn't save the dollar. It publishes what the dollar is actually worth, measured in the only two things Washington itself trusts. And it means the United States government would be bidding for the scarcer one at the same time you can. Now stack that against what's actually different this time. Every real Bitcoin bull run in history had a business cycle expanding underneath it. The 2024 and 2025 move is the only one that didn't, which is exactly why it felt so hollow. Well, the engine is turning back on in a big way right now. And then add the two things Bitcoin has genuinely never had. The structural dollar decline Matt Cole laid out, which Bitcoin has never once traded through, and a government holding the legal authority to conjure trillions of dollars and have said out loud that they want to buy some. All three in the same quarter for the first time in Bitcoin's life. For 10 months, the consensus was simple. The 4-year cycle runs its script like it always has. We bought him in the fourth quarter, somewhere near $45,000. And then it starts over. Checkmate's read is that the squeeze got as violent as it did precisely because that was the consensus. Everyone was leaning the same way. In 7 days, this market took out 3 of the 4 lines the bears had left. And there's one left. And if we take it, this is the start of the first genuinely parabolic run Bitcoin has seen since 2021, showing up in the first macro setup ever built for it. You are not bullish enough. But now I want to hear from you. If Besant revalues the gold, do you think Bitcoin ends up on the buy list, or does Washington stop at the shiny metal? Is 82K your line to cross before the bull run officially starts? And to everybody who spent 10 months waiting for 45K in October, Are you ready to throw in the towel? Drop your thoughts in the comments below. If this gave you signal, hit the like button and share it with a friend who's been asking if it's too late. And subscribe to Simply Bitcoin for more signal every single day. I'm Hurley. This is Truth Block. As always, thanks for hanging out, and I'll see you on Thursday.